Natural gas prices have been in focus in recent weeks, having traded at 6 weeks highs to move above $8. Now, while we have pulled back down to roughly around the region of $7, we'll take a look at what to watch out for in the final month of 2022. Hello and welcome to the Capital.com YouTube channel. Before we begin with the natural gas price update, if you could please like the video, that would be greatly appreciated. And also, if you want to add to the debate, then feel free to do so by putting your comments in the comment section. And if you haven't already, please do subscribe up to the channel and click that notification bell if you want to be notified on our latest videos that we put on the YouTube channel. Now, regarding the natural gas price outlook, of course, natural gas prices remain somewhat elevated, albeit off the 6 weeks highs of just above $8. We are currently tracking at around $7 at the time of recording. Now, a couple of factors that have kept natural gas prices elevated. Of course, the wintry season is starting to pick up after the somewhat milder than expected autumn that we've seen over the past couple of months. Now, there has been reports of a potential cold snap across the US, and also temperatures are beginning to fall in Europe as well. And in turn, this is seeing a pickup in demand, and consequently, natural gas prices remain somewhat elevated. And it does keep somewhat of an undertone of support for natural gas prices going forward over the next couple of weeks. The other factor, of course, is the potential of a US rail strike if there is no agreement between management and the rail unions by December the 8th. If that's the case, then there would likely be a rail strike in the US by December the 9th. Now, what does this mean for natural gas prices? Well, one thing we could see is coal deliveries become disrupted along the supply chain, and therefore we could see coal stocks fall by roughly around 1 million tons per day throughout the strike, which in turn would see power plants needing to switch from coal to gas to burn in order to produce electricity and keep running. So therefore, that's somewhat of a bullish impetus if we were to see a confirmation of a rail strike and no agreement between the rail unions and management. Then one thing you could see is natural gas prices seeing a bit of an uptick on the back of that. And of course, rail strikes don't tend to be somewhat long lasting. The previous rail strike had lasted around 2 days. So therefore, that's something to also consider as well. But of course, if we see reports that there's no agreement happening anytime soon, and the longer that it goes on, then that's the more sort of case that we would see continued support for natural gas prices going forward. So definitely one thing to consider for December. Elsewhere, of course, the long-awaited restart of the Freeport LNG facility. Again, another bullish impetus for natural gas prices. And definitely, I think one thing that's been probably factored into the price over the past couple of weeks as we've moved to a 6-week high. Now, one thing we haven't been given is the exact date of when there could be the restart. It has been touted around mid-December. Now, if we were to get a precise date, say, for example, December the 16th, say over the next couple of days, then one thing we could see in terms of the price of natural gas is we could see a pickup into that date, and then we could see a sell-off just after that date. And that's typically called a buy the rumor, sell the fact. It's generally sort of a behavioral sort of finance, behavioral sort of trading is one thing you notice across many other assets. So that's definitely something to be aware of, particularly if we get a date. One thing I would expect to see or anticipate is perhaps some front running among traders, pushing up the price heading into that event, and then we could see a sell-off just after the actual date of the date that they actually restart their facility. However, of course, that's dependent on whether Freeport actually announce a precise date to when they actually do expect the restart of the facility to take place. So those are just a couple of things to think of regarding the natural gas price outlook. Now, regarding some of the key technical areas to watch, in terms of resistance, we do have that situated at the 100 DMA around 742 and the 200 DMA just above at 749. So that's probably an area of key resistance around sort of 740 to 750. Just above there, then we do have the November highs at $8.10. And of course, it does just come above the psychological $8 area. Now, Support wise, we do have 690, which is the weekly low thus far, and then below there 656, where the 55 DMA resides, and also somewhat coinciding with the descending trend line from the recent peak as well, which was prior resistance and now likely to be support going forward. And then just below there, the psychological $6 area to watch out for. So those are your key areas to watch out for on the technical analysis side of things. So as we take a look at the chart, and as you can see here, that cluster of DMAs, the 100 and 200 DMA at around 740 to 750, just capping some of the attempts to bounce back in natural gas prices over the past couple of sessions. That low, as I mentioned, around 690 would be a key area to watch out for, the weekly low. And if we were to see a break and a close below there, then you'd be looking out towards that 55 DMA at about 655 to around 660, which slightly coincides with the descending trend line from the recent peak, as I mentioned before. So again, these are some of the key areas to watch out for. At the moment, the RSI is just slightly tilting towards the downside, but not really too much of a concern unless we go below 50, which could therefore suggest that we might be inclined for some further losses for natural gas prices. As I've mentioned, a lot of bullish factors heading into the final month of 2022, particularly the Freeport LNG facility. And again, one thing we could have is a bit of a buy the rumor, sell the fact, particularly if a date is announced on that front ahead of time. Then I would expect to see some front running of trades, and potentially we could start to see a bit of a move back towards $8 on the top side. So a couple of key factors to watch out for, and also that US rail strike as well hasn't been confirmed as to if one is definitely going ahead. So we will likely get more details on that over the following week, as the deadline is the 8th of December. So again, a lot of sort of headline risk regarding natural gas prices going forward. But as you can see here, roughly around 655 to 650-ish, key support here. We have bounced off these levels and then been capped at these sort of areas before. So that is sort of your indicator as to whether the trend is tilted towards the upside or downside around that 650 to 655 area, which again, as I mentioned, does trade at the 55 DMA at present. If we take a bit of a longer term look, and as you can see here, we are somewhat tilting towards the upside on the weekly basis. We're putting a bit of a doji candle there on the weekly candle. If we were to sort of close at around $8, then that would be probably a bullish weekly candle, and suggesting further upside going forward for natural gas prices. And as you mentioned here, with regards to the RSI, we're just holding above that 50 area. So risks do still remain at the moment, technically geared towards further upside momentum. So that is all for today's natural gas price outlook video. Thank you all for watching, and good luck trading out there. And if you want to be notified on our latest videos, then again, click that notification bell and you'll find out all our latest content on the Capital.com YouTube channel.